In this video, I'm going to show you guys 4 secret tips that will help you become a 6-figure trader that no one talks about or even teaches you on YouTube. These tips are extremely important for you to understand if you want to be a successful trader making over 6 figures every single year. So let's get into the content. Let's go over the first tip so you can go ahead and get started on your trading journey properly. But before I get started with the first tip, it's important for you guys to understand that in order to be successful, you have to follow every single one of these tips and not just 1 or 2 of them. So make sure you understand this video, and if you have any questions, leave them down in the comments below and I will reply to every single question that's posted down below. So the first tip is that we have to understand the strengths and weaknesses of the strategy that we are currently using. Let me give you an example of that. Okay, so here on the chart, we have our MACD indicator, and everyone understands the MACD strategy. It's very simple, but if you haven't heard about it yet, let me show you guys quick in 30 seconds how this strategy works. So over here, we have the 0 line on the MACD, which is right over here. If the moving averages are above the 0 line, the price is considered bullish. And if the moving average are below the 0 line, the price is considered bearish. Now, the way you want to enter with this strategy is very simple. You just want the fast moving average to cross over or under the slow moving average. So for example, right here, guys, we see that we have a cross right there, with the fast one being the blue one and the slow one being the orange one. And we can see that the price told you guys to buy over here and the price started going up. Now, this is an excellent strategy if you're trying to trade the trend. So for example, right here, again, we have another cross that we could have taken this strategy across right there, the price would have went up, and another cross right here as the price is currently going up. But this strategy is absolutely terrible at predicting reversals in the market. Let me show you what I mean. So for example, right here, it told you that there is a reversal right here. The price did not really go anywhere. That would have hit your stop loss. Again, it told you guys that there was a reversal right here around this section. Again, this would have hit your stop loss. Same thing happens over here. We had another signal for an entry for a reversal, and again, the price would have hit your stop loss. So we have to understand exactly the strengths and weaknesses of the strategy that we are using in order to be profitable in the market. So if you're using a trend trading strategy, you want to make sure that you're only following the trend to make sure that your strategy has a chance to succeed and make you money. So if you are following a trend trading strategy, then you want to make sure that you're never trading against a trend. And if you're following a reversal strategy, then you want to make sure that you're never trading in a trending market. This is very important for whatever strategy you're using, whether you're using the MACD, RSI, Elite Algo, or any price action, whatever you call it. You got to make sure that you understand the ins and outs of the strategy and avoid its weaknesses. Next, you want to understand if that strategy actually works for you. What do I mean by this? Some strategies are specifically meant for scalping. Some strategies are specifically meant for swing trading. You want to have a strategy that works for you and not necessarily what works for some people. So for example, if I have a strategy that works perfectly well for me and it's good and it's based on my personality and how I like to trade, that doesn't necessarily mean that it's going to work for you, because you might be a slower trader or a faster trader, or simply you just don't like looking at the chart 24/7 to understand what's happening on the chart, and you want something that you can just take 20 minutes to look at the chart, pick a trade, enter that trade, and walk away and let it hit your stop loss or take profit. So really, again, you have to pick a strategy that works for you and not for what everybody else is using. Secret tip number 2, guys, is that you're relying too much on these indicators like the MACD, like the RSI, or these strategies, any type of technical analysis to make sure you're winning in the market, and you're not relying enough on fundamental analysis. Let me give you a couple examples of this. So we know a few months ago, all these big companies like BlackRock, like Vanguard, were buying Bitcoin in bundles. So they were very bullish on Bitcoin. What does this mean, guys? This means that right now that Bitcoin market was very bullish. If the biggest company in the world is buying Bitcoin, maybe you should buy Bitcoin too, right? That's fundamental analysis. You understand that if the biggest company in the world is buying Bitcoin, then Bitcoin is very bullish. So what can you do as a day trader when you're trading Bitcoin? Well, now you understand that there's very bullish momentum on Bitcoin, so you should be looking only for buy opportunities and not short opportunities when you're looking to trade crypto. This makes sense from a fundamental analysis part. So combining that fundamental analysis that understand that the biggest company in the world is buying Bitcoin, then you can use your technical analysis for whatever strategy you're using, RSI, MACD, price action, Elite Algo, whatever. You can combine those two together, and this will give you an insanely high win rate, because now you're trading with the trend on both the technical analysis aspect and the fundamental analysis aspect as well. Now on to tip number 3. So now we need to understand that trading is a business, so you have to treat it like a business. And in order to do that, you have to track all your trades. You have to understand exactly which trades you took, why you took it, when did you take it, did you lose, did you win, all that information. So every single trade that you take should be written down somewhere on a journal, whether that's on a paper journal or somewhere on an Excel sheet on your computer or anywhere on your phone, in your notes tab, whatever. But you have to understand exactly what's happening with every trade you're taking. Did you win? Did you lose that trade? What price was it at? When did you exit? Why'd you take it? All that stuff. So you can go back and study it and see what you did wrong on the losers that you got and see what you did right on the wins that you got. It's very simple. Just like when you're starting a business, let's say you start a restaurant, you want to understand everything about that restaurant. How much money you're spending on staff, how much money you're spending on electricity, gas, food, how much your profit margins are on that food, all that stuff. All these stats are extremely important for you to be able to fine-tune your trading and make sure you are a 6-figure profitable trader, just like how you're running any business in the world, whether that's a restaurant or any other type of business that you can think of. And the last secret tip, guys, this one is very important. I see every single rookie trader, every new trader with at least 1 year or less of experience in the market fails at this aspect, and that is risk management. You guys are too focused on making money and not focused enough on preserving your money, because without your money, you cannot make money. So it's more important for you guys to keep your money and make sure that you are not losing your money. What does that mean? That means that if a certain trade that you're looking to trade doesn't fall 100% on the criteria that you're looking for in your strategy, and maybe you only get 3 of the 4 confirmations that you're looking for, then that means you should not take that trade. You should stick to logic and not emotions, and not buy into fear of missing out, FOMO, right? This is exactly how you can start building bad habits in the market, and this is how you can start losing your strategy as a good trader. So you want to make sure that you're always looking to protect your capital first and foremost before making money in the markets. And then once you learn how to double a $100 account, this means you can double a $1,000 account, and you can double a $10,000 account, and eventually you can double a $100,000 account. But focusing on preserving your capital is the most important goal as a trader. And that's pretty much it for the secret tips that no one talks about when they are making videos. If you like this content, you have any questions down below, leave a comment down below and I'll answer every single question that is asked there. If you like this video, please subscribe. It motivates us to make videos like this every single day so you guys can get quality content. Thanks, you guys. Have yourselves a good day.